What's up, ladies and gentlemen? Welcome to the Beat of Business. And in this video, I want to talk about 5 fintech stocks that you should consider owning over the long term. Over the past few years, financial technology companies have outperformed the banking sector, and that outperformance should continue going into the future. According to a recent report that was published by Deloitte, the global fintech market was valued at just $108 billion in 2018, and that value is expected to increase to more than $222 billion by 2024. When I think of the most successful companies in the world, whether it's companies like Microsoft or Google or Facebook or even Apple, the investors that made the most money have been those that have held the stocks the longest. I mean, whether you bought in 2005 or in 2016 or anywhere in between, you did extremely well because you were a long-term investor. Now, when I think of long-term investing, I try to think of disruptive technologies, and more importantly, I try to think of what products and services people in their late teens or in their 20s or in their 30s are using, and what people who are not quite yet teenagers will be using in the future. And when it comes to banking and when it comes to the financial services industry in general, there just aren't too many other sectors or industries that are just ripe for destruction and just ripe for a shakeup to allow new entrants. While our traditional giant banking institutions have been busy charging the average consumer astronomical fees and nickel and diming them on just about everything and offering subpar services, fintech companies are slowly gaining more and more market share as the need for things like digital payments grows and the need for online banking grows. And this transition to online banking and this transition to fintech companies was only exacerbated by the pandemic. You see, as local brick and mortar, bank storefronts closed and the underbanked people who live in rural areas were not able to do their daily banking, people relied on technology to do their banking. Financial technology companies are the future, ladies and gentlemen, but they are also very expensive because the markets are paying a premium for fintech stocks. But when we look at the big picture, we are still in the first inning of the financial technology revolution. Maybe these stocks look expensive today, but in 5 years or 10 years, we could easily look back at this time and say, man, those stocks were so cheap in 2021. And with that, let's jump into our picks. But before we do that, if you could like this video by hitting that little thumbs up button below, it would be greatly appreciated. Stock number 1 is PayPal Holdings, ticker PYPL. You know the saying, cash is king? Well, sooner or later, cash is no longer going to be king. In fact, we will probably go away from cash altogether. I mean, we've already seen numerous countries across the world move on or away from paper payments, and that trend will eventually hit the developed world, and companies like PayPal have a lot to benefit. Currently, PayPal is trading at around $283. It has a market cap of $332.569 billion, a PE ratio of 69.05, and over the past 52 weeks, PayPal has a 52-week low of 171.63 and a 52-week high of 310.16. There are currently 45 analysts who cover the stock, and the average price target is $327.67, which is well above its current price of $283 a share, with a recommendation rating of 1.9, which puts it between a buy and a strong buy, according to Yahoo Finance. You can ask just about anyone, and PayPal is often considered to be the king of digital payments. I mean, their digital platform boasts more than 400 million active users across 200 markets, transacting in 100 different currencies. And ladies and gentlemen, all of those numbers are growing. According to the company's 10K, PayPal helps merchants and consumers connect, transact, and complete payments, whether they are online, on a mobile device, in an app, or in person. And many of you may not know this, but PayPal actually owns a lot of payment companies and payment services that you may use regularly, including Venmo, Zoom, iZettle, and Hyperwallet. And now you can also buy cryptocurrency on their platform, which is essential if you want to be a notable financial institution going into the future. PayPal has grown its revenue by 19% year over year for the past 10 years, and I see a similar situation playing out over the next 10 years. Now, if you buy PayPal stock right now, you'll be paying roughly $281 a share, which is down from its recent high of $308 a share right before they released their Q2 results on July 28th. Now, since they missed analyst estimates, we saw a sell-off in PayPal stock, and that's one of the reasons I think right now is a great entry point for long-term shareholders of PayPal. Stock number 2 is SOFI, ticker symbol SOFI. After hitting a peak of $24 following its merger with special purpose acquisition company Social Capital, I feel like SoFi stock is an incredible bargain. But honestly, do you guys remember the SPAC craze of last year? I felt like all of these startups were getting crazy valuations, and as soon as the mergers would complete and you'd bought the SPAC with the anticipation, whether it was Lucid or SoFi, we saw a sudden crash. I don't know about you guys, but I'm kind of happy that this whole SPAC mania or SPAC debacle is over. Anyways, SoFi currently trades at $15.38 and has a market cap of $12.289 billion. It has a 52-week low of $11.80 and a 52-week high of $28.26. Now on Yahoo Finance, they are currently 3 analyst price targets with an average price target of $23.17 and a recommendation rating of 2, which is a buy. Now listen to this. In the first quarter of 2021, SoFi's user base grew by 110% to 2.28 million members. Now, SoFi offers a wide variety of products, including the ability to invest in the stock market and cryptocurrency, get personal loans, you can get insurance of all sorts, you can get student loans, home loans, credit cards, and even auto loan financing. Honestly, you can look at just about any key metric on the company, and the growth and adoption rate is just incredible. I mean, just look at some of these charts. In Q1 of 2019, they had 704,000 members on their platform, and at the end of Q2 2021, they had 2.5 million members on their platform. In 2018, they had $241 million in annual adjusted net revenue, and over the last 12 months, they've had $852 million in adjusted net revenue. And SoFi's year-over-year growth in their products is quite remarkable as well. At the end of Q1 of 2019, they had 782,000 products being used by their customers. And at the end of Q2 2021, that number is over 3.6 million. That's a year-over-year growth rate of 123%. In my opinion, SoFi is the future of financial products. I mean, when I think of people that are younger than me and what they're going to be using in the future in terms of, to do their banking and all their finances, they're not going to be going to Bank of America or to Chase. They're going to be using SoFi and other companies like it. And right now, it's trading at an attractive level. So if you want to be a long-term investor, now may not be a bad time to get in. Stock number 3 is Square, ticker symbol SQ. Like PayPal and SoFi, Square is actually trading down from its all-time highs. Currently, the stock is trading at around $246, and it has a market cap of $113.5 billion, and an extremely high PE ratio of 222.84. And over the past 52 weeks, its trading range has been between $139.31 and a 52-week high of $289.23. According to Yahoo Finance, there are 42 analysts that cover the stock with an average price target of $302.93, with a recommendation rating of 2.2, which falls in between buy and hold. Since the end of 2017, Square's total revenue has grown at an unreal rate. Now, at the end of 2017, they had $2.2 billion in revenue, and over the past 12 months, they have almost $16 billion in revenue. Square was established to give every business owner an easier way to take credit cards, and over the years, I can't help but notice their remarkable growth. So if you've ever seen a terminal that looks like this, or a terminal that looks like this, that's a Square terminal. Square's entire business is driven by 2 main ecosystems. You have Square, which they call the seller business, which includes things like point of sale hardware, payroll software. You have your CRM tools, which is customer relationship management, and you have Cash App, which is the other part of their ecosystem, which is more focused on traditional and new financial products like peer-to-peer transactions, buying stocks, buying crypto, and lending solutions. Since 2015, their compound annual gross profit rate sits at 50%. In 2015, Square generated $345 million in gross profit, and at the end of 2020, they generated $2.7 billion in gross profit. And according to their latest investor presentation, they are just getting started. I mean, even with all of their success, they have hardly penetrated the broader market. Square, aka their seller ecosystem, has penetrated less than 3% of a $100 billion market opportunity, and Cash App has penetrated less than 2% of a $60 billion market opportunity. And just recently, Square announced that it would be buying Afterpay, a pioneering buy now, pay later platform. Now, many think that this will accelerate Square's growth going into the future, as they can easily integrate Afterpay into their seller business and into their Cash App business. I wanted to provide you all with these stocks, not only due to the fact that I'm bullish on these companies, but due to the fact that I'm actually bullish on the sector as a whole when we talk about fintech. Now, these three companies are far from the only three companies that you can invest in. I mean, there are many others out there that you should consider, including, Stripe, Plaid, you have Coinbase, and honestly, don't forget about the more what we think of as traditional players like Visa and MasterCard and American Express. I mean, they are making big time moves to become more fintechy in their business models. But if you don't want, or if you don't like, single stock exposure, there are actually some awesome ETFs out there that you can buy as well that will not only get you exposure to these three names that I mentioned in this video, but to the broader industry or the broader sector as a whole. Actually, now that I think about it, I think I'll actually do some research and I'll do a video on my top fintech ETFs in the near future. So if you aren't subscribed to my channel, please be sure to do that. And if you haven't liked this video, apparently that's what the YouTube algorithm really likes, is likes. So please be sure to like this video if you haven't done so already. And with that, ladies and gentlemen, we are going to call it a video. Thank you all for watching. I'll see you all next time.